right, we streaming too, fellas. We streaming. Let me go ahead and get the link posted. Let's see. All right. Sure. Hey, if you just joined the voice chat, make sure you join in with the mutes mic for now. Links posted. And we gonna hop to it. See how many people gonna hop in real quick. All right, we're gonna go ahead and start. I was trying to give everybody a few minutes to hop in, but we got 20 people in the chat right now. If you're watching, go ahead and share this post. We're gonna do our best to drop some gems for you guys. I'm gonna go over a couple of tickers, probably the SPY and the Qs, and take a few requests on any of the charts you guys may be interested in, and just give my little due diligence and show any new beginning traders, how you start doing technical analysis in the way that I do it. So we're gonna start from there, and I'll I'll give it a few minutes. I also got trying to make it. He's one of my analysts here in the kingdom. He's gonna give his stock market due diligence on some of the stocks that you watch, like Apple, Nvidia. I've seen him trade that, but he's gonna bring to the table the stocks that he likes and going into next week. We also have Fridge Financials. He's gonna drop a few gems on his economic outlook, and if you guys have any questions, or looking for any type of logical information pertaining to the market, I'm pretty sure he'll be able to help you guys out. And also, we got your boy New Fish, Big Pun. Everybody knows him. Everybody loves him. He's gonna be tapping in with us today too. We're gonna try to form this little super team tonight and try to bring you guys the most informational group discussion that you guys can have going into this upcoming week. So, um, cool. Discord open. You have to go check the link in if you're on after hours. Check my bio, or check trying to make his bio. The links in there. So that's how you know, if you want to join the community, that'll be how you take it.
Yes, sir. You can just click my link. We have two branches. We have two different sets of communities. One community is completely free. You just walk in, get all the basic strategies, basic people, everybody's there to help. The second community has an even bigger branch, even bigger, even more detailed analysis. And I just suggest everybody tune in.
Appreciate it. Appreciate it. Um, let's go ahead. I'm gonna go ahead and start everything off on my end. And what I'm gonna do is I'm going to check out the spy and the Qs. We got 65 people watching. Like I said, if you're watching, go ahead and hit that like button. If you got somebody that you know that watch the stock market, go ahead and share it with them. That way we can get this free information across to traders, and we want to be able to reach out to everybody. You feel me? So um, I'm gonna go ahead and lock in with the spy, and I'm gonna start off. Like I said, I normally like to clear my charts going into the next upcoming week, because you know sometimes trend lines break, they have retesting moments, structures change. So after about a week, which is normally good for me, I like to go through and just switch up um, the trend lines and see pretty much what's gonna make sense going into this upcoming week. So if you watched a few of my videos, I like to take the top down analysis approach. And what that pretty much is, you're starting from a higher time scale and you work your way down to be able to draw your trend lines and get the broader scope of, how healthy the stock is. So when you do this, you can see where the stock came from and where it's at currently now. This is the 6 month. This is a way bigger time frame than looking at, the 5 to 15 or 30-minute charts. And so one thing with me, I use simple bar charts. I mean, you can rock the like the regular candlesticks, what you usually see and things of that nature. My thing is I just like, regular bar charts. That's good. You see the green, you see the body, you see the wicks. All of that stuff is good, but my thing is just doing just straight bar charts. There's so many that you can pick from. Um, that just works for me because it's just meat and potatoes. It's straight bones. You see opening price, you see closing price. So the first thing that I'm watching for is to see where is price action. Is the price action trading above the opening price, or is it below? And if you watched a few videos back, I said starting off into the year we want to watch the 6 month candle, because that's gonna give us a sentiment between how we're looking going into the first half of the year. So as long as price action is trading above this opening price right here, that's at about 589.16. That lets me know SPY as an entirety right now um, is looking healthy. So as long as we're looking healthy, then that means you can play call. You can look for the dips in the market. But as soon as we start dropping below that opening prices, that candle should then turn yellow or red. And what that means is, all right, we're in this bearish territory, and now that we're below opening price, puts may be in effect. How low? We don't know. We just looking for the previous highs and lows of the 6 months before that. So what I would pay attention to is where did we open and close at last year? So going into this new year, January, we pretty much closed December here and we opened just a little bit above that. So that means prices held pretty well in this 588 to 586 range. So we can consider ourselves, like I said, bullish. Cool. Those are gonna be the levels that I would want to mark, and I would just mark it neutral. So I probably mark it yellow just to give it a color reference. So now that we're here, let's look and see what type of trend that we have. And you just start off with drawing simple trend lines. And I'm just looking for the healthiest trends. I'm not looking for anything just one or two candles. I'm looking for at least like two, maybe three touches on a trend, just to let me know that a certain level is respected. The more touches that it holds up, the more respected that the trend is. So once I have this lined out on a 6 month chart, what I'm gonna do from there is I'm gonna scale down. I'm gonna look at the 2 month and see if I see any immediate trends there. And for some reason, the lines get a little bit more detailed as you start zooming in frames. So you'll have to readjust as you go. But as I start scaling down, I'm looking for even more immediate trends to size up pretty much the price action. And as I start to wind down to smaller time frames, I'm not drawing any more trends once we get to the daily pretty much. The daily is the last level that I'm looking at for solid trends. And like I said, there's different ways to do this, but personally, this is just my way that I enjoy doing it. It's worked for me. Um, the bigger the time frame is with the trend lines, the more respected those levels normally are. So that's my reasoning for doing the top down analysis because I'm a natural swing trader. So since I'm a natural swing trader, I'm always looking for the bigger moves instead of looking for just what's gonna get me through today. And that's how I get most of y'all to be able to give you guys my analysis on a daily day basis and never really, change up what I'm looking for. What's up, Six Sigma? Let me mute you real quick. All right. What's up? What's up? All right, he good. All right. Trade view. Appreciate it. All right, so now that I'm on the daily chart, this is probably my last level that I'm gonna start looking for trends. My thing is I like rising trends. Some people like to do horizontal. I like to stay away from the chop. I like to see, where are we gonna bounce it and where it should rise it. We can look at a horizontal pattern all day and play those patterns as all day. And sometimes that's fun, but to me it gets boring. We scale in on that. We taking, puts up here, calls down here. Sometimes we break above, and you seeing things like that. But I like to see moves where we have a dramatic drop, and then I like that spring back forward, and that's why some of my swing plays go for 50, 75, 100% sometime because I'm looking for the more aggressive move down because I like to see that V-like recovery right back up instead of looking for the sideways, movement and wondering when should I sell. I want to hold for at least 2 weeks because I want to get that full momentum and it spring up once I get there. So now that I got majority of my trend lines drawn out for my day-to-day usage, cool. That's why I'm locked in. I'm stopping right there because everything else kind of is too fast. It's too up for me. I like gradual increases. So now that I'm locked all the way in on my charts, you can start looking for any type of resistance. Okay, so that's what we're gonna use as resistance right there. Boom. So we got a nice little triangle pattern form right now. All right. If you look, we almost we have a bearish engulfing candle, but it stopped just short of taking out Thursday's lows. Very big candle. We held above the previous day's lows. It's still a weak motion though. So you want to look at how big candles are because that just lets you know how big the momentum was and how much people offloaded, um, from that stop. And right now it's not looking very strong at all. We didn't even see an inside bar or consolidation. So once I get done with the data, like I said, I'm scrolling in. Also, if you don't have it already locked in on your trading view, make sure you add the gaps indicators. Pretty much the gaps indicators let you know if there were buyers that stepped in or whether there were sellers that stepped in. And most of the time, that's like the price imbalances, kind of like FVG and reading those things. That's kind of what these is. So normally, if we trade inside of these green zones, that's a demand level and we should push back up. And normally when we trade into the red or supply levels, we push back down. And I'll show you guys a few examples once we start scaling in a little bit more. So like I said, we got the bigger picture on the daily. Now we're gonna start moving down through the hourly just to see, um, where are we headed to? Where's the support at? Where's the strongest buyers at? Where's the most sellers at? So 4 hour, you get two candles in a day on a 4 hour chart. So that lets you watch the first half of the morning and let you see how the stock is performing, and then you get to watch the second half of the afternoon to let you know where the stock is headed. So once we've seen this rejection up here, this will be the beginning of this trend line. At first, we were chasing all-time highs. So now that it tried to, but it fell short of all-time highs, and we sold off. Sellers stepped in a little bit back. This is last Friday. Sellers stepped in here at 609.75. So over here, we retested just about above where the sellers were last time, and then we sold back off, and that created this. Now we have a trend line for resistance. So now we're looking for this support. So once we get this, now I'm kind of formulating a plan in my head, and I'm seeing what's up and coming. What was the TV indicator you mentioned? It was the gaps indicator to so that your chart can automatically label these gap ups and gap downs. I need one person. Somebody just joined. Need you to mute your mic. I got you. Cool. All right, back to it. Um, Now that we have this 4 hour look, I start formulating my plan down to like the 1 hour. So I'm looking for details still. The 1 hour and the 30 minute pretty much is going to give me a picture of where to look for support at. So once I'm on a 30 minute, I see that we formed a consolidation around here. So now I'm going to be looking for either a bounce anywhere between this 599, and this would be a buy zone to respect this trend and work its way back up. Now you can do a break and retest, and sometimes it'll break out, and that'll be a move down, a retest up, and then a drop back then. But the problem with that is sometimes you get faked out because we have underlying support right here. So if you drop down here, sometimes we all see it. We see the price drop, we take puts, and then all of a sudden we see a spike back up. That's because buyers stepped in here, and now you have to restructure the way that your chart looks and figure out a lower level of support. Obviously, we're going to get bought up here, and then our next level down might be here. But what we're going to watch for initially is the break and then the bounce here, and that'll make for maybe a downwards pattern here, and we later retest these levels, or it could bounce up and it just retesting the higher highs of this trend until it reclaims it again. So this is how I kind of prepare after after you see one move, we see a break and you see a move like this. You always got to look at it like you're planning 2 steps ahead. And when you're planning 2 steps ahead, like I said, it breaks down and you're looking for the next reason for this to be your next level of support. So once I scale on the 30-minute, if we hold, we can take the bounce off of this gray area right here, back up, and we'll look for resistance again. So going into next week, as long as the market doesn't gap down, we could break this, but we're going to see some support down here to see if that's where our first recovery level will be. So, I mean, this news could affect us, but if we see another gap down like this, then this would be a reason for us to go lower. But as of right now, if we trade off of pure price action, we'll see the price drop and we'll see this dip get bought up because people are probably panic sell once this happens. And we'll look for this to get bought up and then retest these higher levels again. And this is kind of what happened to Nvidia. If you look at that chart, they kind of had one of these um, happen when it gapped down like this. It completely broke structures, and now it's having a hard time reclaiming the trend. So just going into next week with the SPY, we're just gonna watch for it first to see if we kind of open in a neutral zone, and if so, then we can expect to see a move like this happen. But if we gap down below here or prices continue to break, even if we break, if we gap down into here, we could see a retest and a push lower, or we could just see price action just come straight down if it breaks. If it does break down below this, we could see prices continue to fall until it catches this level of demand and then decide to recover back up to retest trend. So this is how you plan ahead for the market, and this is how you continue to stay ahead of what you're doing. So just right now, going into next week, we want to continue to watch the trend continue to play out. And then as long as the trend plays out, then you can grab calls there. Just watch for the trend break once you do get in. Because here's the first touch, second touch, and this will be the third touch. You'll want to take it if it bounces and breaks back above the support level and see if that's enough for it to come up, even though we're still trading inside of supply levels. But if it does have to exhaust first and breaks below this is a touch, this is a touch, and this is a touch. If it breaks below here, then you can expect for this short gap fill to happen before it bounces back up. Even if a strong opening Monday, we can push again for all-time highs, then fall again. It depends. This was a big move up. It was a major gap down, and as you can see, we traded back up, and it bounced off of these old levels here, and then it gapped up 1-2, but then it also sold off. So right now, I mean, the market's kind of moving how based off of how the economy reacts to what Trump's trying to do. How the rest of the world reacts to what Trump's trying to do. So that's pretty much what we're looking at as far as the economy goes, and that's why we're kind of on pins and needles also, because we don't know how these tariffs are going to work out, and we have some more earnings that has to come through also that could dictate how the market wants to pretty much operate going forward. So I mean, these are the things that we just gonna have to pay attention to this upcoming week, which could very well much be um, what dictates the trend. So as of right now, these are the scenarios that I'm watching. I'm looking for a bounce within this trend, and if we happen to break structure here, look for a break below daily lows, because you could play the retest up and then take puts there all the way back down. Or if we just break below these lows here, we're out of trend. So watch for the put all the way down to 592 before the recovery happens. And then the rejection also could happen right here. So, I mean, right now, you want to play calls until you see this break. If it breaks, then play puts down to here, if that makes sense. So, we just got to watch and see. But anybody in the chat, let's see. In the comments, drop a few stocks. I'm going to do one for you. And then next, I'm going to turn it over to my boy trying to make it and let him go over something that he wants to do too. Hey, I don't know. Somebody said, so you're saying 600 million out the money calls for SPY at open gonna print. Um, all right. It could, it could. So I mean, it just depends on how this tariffs get digested over the weekend. Bitcoin already isn't doing too well. Last time I checked, yeah, it's dropping, but it's also trying to make a brief recovery also. So um, I've been watching Bitcoin to pretty much try to see how it's digesting it, and that could be a leading indicator for the market. But we'll see. So, all right, somebody in the chat. Let's see. Uber, UPS, Palantir, Nvidia, Palantir, SoFi, Nvidia. Hey, trying to make it. You mind taking Nvidia for me? Okay, let me go ahead and take one of these, and then I'm gonna turn it over to you for the Nvidia. Archer, SCHG, UPS. Um, I got two Nvidias. I got two Palantirs. Like, you don't count if you the same person, bro. um, I'm gonna take I'm gonna take Palantir. I'm gonna take Palantir, and we're gonna look at Palantir's chart. So, only reason why I'm really taking Palantir is because I'm just amazed at the way that it moves. And look at that, bro. Look at that. Last time I looked at Palantir, we was still trading within this, and now we got a breakout and a possible retest for this thing to take off again. So, this is actually a chart that I drew. I don't even remember I drew. It was last week for somebody, and this little thing just broke out. All right, so let's scale from a bigger time frame, and let's see what I was looking at. So I didn't share this. Um, Look at the gap ups on this. Goodness, sheesh. One thing I didn't share that I did share in my previous videos was this trading rotated rectangle. This has became my best friend because what it does is it's able to give you these clean instead of drawing trend lines. It's kind of able to give you like this clean kind of where to buy the dip at or where to sell at lately. So um, let's start at the let's start at the weekly. So as you can see on the weekly chart, I took this trend right here as the trend I wanted to watch. And also you can take this trend too. I would take this one too. And what you do is you just kind of spread it out and then you realign it with the bottoms of the pattern. Boom. So now that we have it like that, this looks solid enough for me to be able to trade um, inside of here. So now that I'm on the weekly, I check the daily, it still gives me that pattern look, but then it also, when I scale in, y'all gonna see it looks nice. It looks real nice. So now that we have a trend, I got this trend right here, two. That's three touches. That like that bullish counter right there gave you the indication that it was gonna fly anyways. So um, now that we're actually breaking out, we're gonna keep this, and this is gonna be for us to watch the retest. So once I start scaling in, what we're gonna look for is we're gonna look for a retest here, but I also still want to see I want to see another gap somewhere in here because I want to know that the buyers are gonna be strong. We had one down here, and then we had a gap down, and then a breakout. Actually, it traded above supply and actually broke out, which I'm surprised that it did there. But I mean, this is Palantir we're talking about. But we're watching for the retest, and like I said, I want to watch for some type of gap up in these next couple of days. And reason why that'll just give me confidence that all right, this is gonna hold, and we'll be able to take calls off of this and possibly watch it skyrocket to the next level. So give me a gap up around here and watch it take off, then we good. If we if we drop back below this trend in here, then we might be going back down just because, it wasn't strong enough for any new buyers to step in. So it's going back to retest some levels to grab some more liquidity to try it again. And then if we get a gap up anywhere above, let's go on the 5 minute. There we go. All right. So if we can gap up anywhere above this 78, $82, if if we can come back in there, because what we don't want to see is it retests and then it drop back down. If we can get a gap up anywhere below 78, 82, I think this thing is gonna reload back up and it's gonna take off. So just looking at Palantir, give me the gap and I'll go in. I'll go in and watch it skyrocket. And right now, looking at a bigger frame, we'll be watching for, well, hell, it already took off all time highs. So all it's doing right now is going to grab more liquidity. It didn't already broke 52-week highs, look like. Yeah. So all it's doing is it's finna get ready to come back down to grab some more buys, and it's finna try to take off again. Hopefully it doesn't. It like I said, hopefully it doesn't break below 78, 82, and it flushes back down to try it again. But like I said, I like rising trends because look at that takeoff, and it just exploded up. Even though this was the next trend, we had so many touches right here, and it just kind of followed that. Once we started that, once it touched here for maybe 30 minutes, it took off, and it followed into the remainder of the day. So Palantir bullish above a gap up above 78, let's say above $79, a gap above $79, you can go long and you can watch it take off again because it's already above 52-week highs. So hey, lock in. So we said we'll cover Nvidia next. So I'm gonna lock in. I'm gonna lock in with trying to make it super solid due diligence, and we gonna see what he what he got to lock in with. So yeah, hold on. Let me switch back to you. Okay, there you go. You're good to go. What'd you say? Oh shoot. You good? All right. Uh, yeah, we can see. Yeah, it's gonna be a little.
if you really take a good look, I like to use Fibonacci retracements for things like this. You know, you mark the recent low with the recent high, just like that, and then you get this reaction right here at this exact fib level right here. If you guys could focus on my screen on the 61.8% level.
They say they can't hear you. Let me see.
Let me see. Yeah, you can hear me though, right?
Yeah, I can hear you, but let me see. Okay, they say
Okay.
they can hear you
Yeah.
now.
Okay. Yeah. Just mic check. Let me know, everybody in the chat. Type we could hear you, just so I could double check on that. Appreciate it. Yeah, it should be good now, right?
Yeah, they say they can hear.
All
They
right.
can hear you.
Cool. All right.
All right.
So basically, what I was going off of was that this price right here has found support on a very major level, right? The 61.8% Fibonacci level that is in danger. But if you turn on the MAs right here, which I like to use as well, moving averages are a big thing for me. I focus on the 5-day, the 20-day, the 50, and the 200. The 5-day being my micro moving average. It shows me how strong the trend is, you know? As long as this average is holding, the trend is strong. As you can see, not so strong. Broke right through the 20-day and almost through the 50, but the 50-day held very strongly. You can see a very strong wick off the 116 level. The level is sincerely 115. So there is a possibility next week, if the market reacts negatively to the tariffs that we got this weekend, we can go lower. So as for our calls, if you want to go down to a shorter time frame, we can say the 4 hour. You can see that we do have a gap above, and this gap, it's either going to get filled now, or I hate to break it to you guys, by earnings. My estimate guess for this is because we probably are working on some type of consolidation here. Whether it's negative or positive, it really all depends on how we look on opening market Monday, Sunday, particularly, because that's when the market really opens. We have these support levels right here. They are gradual higher highs and higher lows. Like I say, this right here is a typical bear flag, you know? And when you go back to this formation right here, you get a typical head and shoulder formation. So everything they want to show you right now is nothing good. They want to scare you, they want to get you out of your positions, and they're going to prove it to you by making sure these bearish formations play out. So as you can see, we got the break below, but we're holding on. Okay. So as SPY is also holding on to that last thread, so is Nvidia, and I'm assuming the rest of the Mag 7. And if we do manage to bounce off of this support level right here, if we zoom into this chart right here, we have a 65-minute bullish divergence, which I'm very focused on, because normally these play out. If we can go back in time right here, every time these play out, they lead to big fluctuations and movement for the market. You can see right here, we have one giant one right here. The last time we had one led to the right shoulder. The last one we had led to the head. And the one before that led to the left shoulder. So this is the indicator I really like to trust. You can't really trust everything in the market because we're working in a realm of possibilities. You're never certain. But I do like this look here. And the end of day sell off was something that was non-expected. I worked this move all the way up to 127, and by this time I wasn't really paying attention to the market anymore, so I missed this entire move down. But I did snipe the bottom. It wasn't a very particularly good snipe, I could say, because a lot of different, confirmations that I wait for didn't show up. But better safe than sorry, you do get a relief rally from all these oversold levels, because when you go down to lower time frames, like the 15, you're already way below oversold levels. Sorry. There we go. You can see that. That's also a bullish divergence working its way out. You can see how prices fluctuated low, but the RSI is moving up. This is the divergence as well in play. So these type of things can show me that there's probably going to be a relief on Monday. If it happens pre-market and we don't get to drop our contracts off on in the morning, it's okay. You can sell for a minor loss, but the bottom that we want to snipe here is true support, like I said, on this 115 level of the 50-day. Or below than that, we could see probably on the daily chart a break here, and we could probably see if we could find support on this lower low, 90, 100. And these are like the last biggest levels of support I'm holding here. But I do feel like we could hold this level of consolidation we've been having here, you know? So what I'm looking for Monday is a relief bounce. And after that, probably continuation if there's enough volume coming in. Because I always like to look for volume. You always want to make sure that there's positive volume. Towards the end of the day, you can see that there was a bunch of confusion. Here on the 4 hour, you see a lot of mixed emotions. You have big red bars, big green bars, but the market's making his mind up. And I hope you guys could also basically run along with that idea because this gap is here. We can't ignore it. It will be filled at one point, but we can't also ignore that there's a lot of uncertainty going on. So you guys have to plan ahead for that one. And we're going to work on different types of strategies that we could build off of what possible movements we get on Monday. So for now, the sentiment is looking bearish until we get basically a bounce off of this trend line, right, to confirm the higher lows and get hopefully a relief bounce to 122 to 123. We break those levels, 130 is back in the picture. We continue the obvious downtrend that has formed here. We can see 115, 110, 100 could also be in the picture. That all depends on how the market's feeling on Monday. Thank you again, Royalty, for the time that you've given me on the analysis for Nvidia. I hope you guys have enjoyed. Any questions? I'm more than happy to answer them. As you guys can see, I work mainly with the 15 to 65 in the 4 hour chart and the daily, the weekly for major support. Like Royalty mentioned before, the higher the time frame, the stronger the formations you're gonna get. If yeah, bearish target before below 115, I'm thinking 110, 100. Like I said, if we go below 115, those are going to be your major support levels, which were previous lows that held as major support levels for investors. It's institutional buy zones. It's the best way to put it for those zones right there. But below 115, we're looking at 110, 100. Yeah.
Hey, and trying to make it if you want to, like I said, you can cover another ticker if you want to. Anything that you want to draw attention to. You just took Nvidia and I was like, go ahead and take that because I know that's something that you really watch. So if you have anything else you want to share with the family, go ahead and be be gracious and drop the gem on us.
I really appreciate that opportunity. So yeah, as for what's going on with the market, I'm also looking at AMD along with Nvidia, but let me go back to Apple because I know a lot of people want to know what's going on after earnings. So let me be the person to clear up the air in the room. So right here, it looks scary, it looks crazy, but I don't think all hope is lost yet. You know, we have a way better look here. We have a triangle. Wait, wrong support level. Bust that out. We have a nice wedge right here that has been building up its way since May of 2024, guys, and it broke this year, November, when we had that giant run to 260 for Apple. And you can see how this level has held support for some time and then it lost support, made resistance, and now we're below it again. So now the question in hand is where are we going to stop? Are we going to keep selling off? My personal experience with Apple is that it's a very strong stock, and you want to always have this kind of stock in your radar because of the kind of movements it can produce in such a little amount of time. Nobody really expected this move, just like nobody expected this one, and even the earnings move as well. And I would like to mention that since we're here at this level on the 4 hour chart, I see a very good bottoming kind of formation going on here, and all I see is a retest of levels that need to hold. Particularly, I could say we broke this double bottom right here, right? And we're bouncing off the retest level of that particular double bottom, right? So I wouldn't be panicking. unless it goes below 230, then I get into shorts because at that point now we got the 20-day MA crossing below the 50-day MA already, and the 200-day MA is already, above both MAs. So that's already giving you your clear bearish, indicator right there. So once you get that ultimate 20-day, 50-day cross below, then you could get in for puts. But for now, I think if we hold on the daily chart, this 20-day moving average, 235 area, 234 on the 5-day, we should be okay for a bounce. Like I said, on Monday, if we do get a relief on in the morning, we could see stocks like Nvidia going back up again to prior resistance levels, support levels, like 122, 123, which is what I'm hoping for. We got Apple possibly retesting the MA levels of 236, 240, hopefully working its way back up to its prior highs. And if we look at this chart right here, hold on, pretty sure we can see it better right here. Oh, wait, gap already got filled. Okay, so what Apple needs to do right now is basically work its way back up. And the chances of that happening, they don't look bad. They don't look bad. You already had an attempt, retest, and now you just need the right kind of momentum to continue the fluctuation. Depending on the movement and how the market sustains itself throughout the week as well, news and all that other good stuff. Apple is definitely in the picture for calls or puts, but for now, I might like calls. So yeah, that's also what I'm looking at. And for now, I'm gonna just keep it at that, guys. I'm gonna hand the mic back to Royalty. Hope you guys appreciated that analysis. Very it's what I'm looking for this week.
All right, man. Hey, appreciate you for dropping that knowledge on us and pointing out what we can look forward to on Nvidia and both Apple and on some of those I do agree um on the things that you're saying. So that's definitely gonna be some solid levels that we're gonna watch this upcoming week. Um Fish, what's up, bro? You want to talk to us about anything you watching, man?
Hey, I'm here. I'm here. All right.
Okay, cool.
So,
Well, look, what I did is I'm gonna leave my chart up, and anything that you draw attention to, I'm just gonna pull it up, and we'll check it out for you.
all right, I appreciate that.
Got
All
you.
right, so I got a couple things here that I want to go over. The first thing that I think we all want to talk about is the tariffs. I think everybody's in a bit of a mood. Nobody really knows what's happening. Um, it is official. Trump tweeted or put a truth out, whatever. I want to give a shout out to D-Boy Stonks for posting that. Um, Trump did put out on socials today. Uh, Tariffs on Mexico and Canada are 25% each, except for Canadian energy. Canadian energy is going to be 10%, and we are starting with 10% on tariffs on China as well. And then this morning, I read an article that said Trump may start a trade war with the EU as well. So that could be another one coming, guys. So just prepare yourselves if that happens. Um, I saw Trump put on some socials also that we dropped some missiles on the ISIS strategic planner. All right, and that we killed him or we killed a bunch of them or whatever. So I'm expecting defense sector stocks to rise on Monday. Um, I pulled up two prices. Halliburton's trading at 26.05, so that's inexpensive for people that want to get in there. Or that's where it closed at, I should say. And then Raytheon RTX, that's trading or closed at 128.50. So those are two stocks that you could look at. Those are the old favorites in the defense sector there. We got to wait and see. Sunday 8 o'clock. Check your Robinhood. See where things are opening up. And we got to watch and see what happens on Monday. Um, Everything could be priced in already for Monday, or we could see another bloodbath. I have no idea. I got no clue. Um, so I just wanted to bring that to everyone's attention. Um, I got three other things I want to talk about. A lot of people have been asking me what I'm doing investing in MSTY. It's the MicroStrategy Yield Max ETF. Um, the reason I'm putting money into MSTY is because they do a nice monthly dividend. And this is not a growth ETF. This is an income ETF. So this is a way for you to get just passive monthly income, right? I'll give you an example. Last month, and you can go to Nasdaq.com or just Google MSTY dividend history, and it'll bring you to the Nasdaq page. You can go there and find out the information for yourself. The ETF's been live for about a year now. Uh, but it does tell you the dividends that it was paid out for the past 12 months. So last month the dividend was $2.29. And I had, I don't know, I think 118 shares or something like that. So, I made a nice little dividend there, and I just took that money and I reinvested it into more shares. And then whenever I see that the the whenever I see that the stock is trading below my average, or if it's a red day, I'm always buying it. I'm accumulating shares here and there, just to make sure that I can get as much passive income coming my way as possible each month. When I get that income, when I get that dividend, I don't have to put it back in. I don't have it set up on a drip, which is a dividend reinvestment program. If you had it set on a drip, that would automatically reinvest your dividend to buy more shares. But I don't want to do that, because what happens if I get paid my dividend and, you know, the price is up? I'm going to want to wait for a red day. Or conversely, I can take that money, I can play around with it for a few weeks, try to turn it into more money, and then more shares of MSTY before the recording date, so that I can get more dividends on the next month. So right now I'm at 195 shares. I'm just trying to get that up gradually. My goal is to get 1,000 shares. I would love to have passive income of $2,000 to $4,000 a month coming in. That would be great. The next one I want to talk about is the VIX. I've got this thing. I don't know. Maybe it's a money glitch. Um, Trollstein turned me onto this, and the dude is a genius for it. Um, every Friday, I'm looking for calls around $15, and I'm looking for calls that are about 2 to 3 weeks out. I want to buy calls at 15, and I want to I want to set my strike at about like 17, 18, something like that, whatever I'm feeling. And I want to get the call for about 2 to 3 weeks out. And I'm not trying to get political here, y'all. This is not politics. That we're just going over history, right? We have seen a Trump presidency before, and we know that the man moves markets with a sentence. He's already done that during this presidency. So my feeling is that this is kind of a money glitch for the next 4 years. Last last week that we not this week that we just finished up, but the Friday before that, I bought a call, and then, for what I was just talking about, I bought it around 15 or 15.50 or something like that, and it was an $18 call, and I sold it Monday morning for 45% profit. That's good. The VIX is the fear and greed indicator, so you want to get it when it's around 15, and get it 2 to 3 weeks out. Chances are you're going to make money. Um, I bought this call Thursday, and I got it at 16. I probably should have waited for a better entry. I could have gotten a better entry. Friday, I saw it at 15.50. I was waiting for it to go down, and then it shot back up on the news of the tariffs. So I didn't get my better entry that I was hoping for, but I already had my call that I bought Thursday. So I'm hoping this, I mean, I'm hoping that the call prints in the morning, and then I want the market to shoot up so everybody makes money, you know? And then everybody knows that I love Ion Q, right? Quantum computing. There's no secret that I love this stock. This stock is kind of stagnant right now. And what I'm doing is I had 200 shares. I've already sold off 100 shares of it to invest elsewhere and make the money work better for me. Um, and so right now, what I'm doing with it, since it's not really doing too much, and I don't want to really sell it at the price that it's trading at right now. So what I'm doing is I'm selling covered calls at a strike of $47, right? And so that's getting me about $100 a week in premium. So last week I had a covered call that I sold on IonQ. And then Friday we had some low price action, and my covered call, I was up. I thought it was 98%. No, I was up 99%. So I bought that call back, even though it expired on Friday. I bought it back during the day for $1. And the reason I did that is because I then wanted to sell another covered call, right? For this coming week. So it's a February 7th expiration. And the reason I wanted to sell that call on Friday is because I want theta to work for me. Theta is the time decay on call options. So if I can sell the covered call on Friday, well, that means that Saturday and Sunday, that time decay is working against the person that bought the call, and it's working for the person that sold the call. In this case, that's me. So I'm getting a little bit of help from the weekend right there, no matter what happens. Um, the state's up to $52. Great. That's awesome. I'm happy for whoever gets the call. And I've made a nice little profit on the difference between my cost average and my strike price. Plus, I've already made a couple $100 on selling covered calls. So that's a nice little way to get things coming to you. If the market's stagnant, if you're having a bad week, bad month, you just need to turn some things around. That's something that you can do to help yourself make a little bit of money. Let's see here. Give me just 1 second. Pulling some other things up here. And so everything's taking too much time. All right. Um, and then, you know, uh, I'll just talk about it real quick. I won't go into too much detail on it. But Rocket Lab has been a favorite stock of mine for many months. I've watched this stock since the summer. I was in it at like 6 or 8, I forget. And I got out, because I wanted to move that money around and do some other things. Well, I got back in, of course, So now I've got 100 shares of Rocket Lab, but I'm not selling covered calls on Rocket Lab right now because I'm not getting the premium that would make it worth it for me to sell covered calls there. Um, if you're going to sell covered calls, you got to make sure that it's worth your time. Um, and also don't sell covered calls on something that you really want to keep. You can only, I would only advise selling covered calls on stocks that you're comfortable letting go. Um, I love IonQ, but I'm comfortable letting it go now because I think that I'll be able to get it back on a dip sometime in the future. That's just what I think. Now, that could all change. Who knows? I could be right. I could be wrong. I'm wrong a lot. I'm wrong a lot, so that's just something that we'll have to wait and see, because like I said, things can change in a minute. With the new president, he moves markets in a sentence. So that's one thing. And then the last thing that I want to leave y'all with, I post this all the time, but I just really want to reiterate it, is red days are for buying or holding, and green days are for holding or taking profit. At least that's my personal philosophy. I try not to buy on green days, and I try not to sell on red days. Uh, make sure you have a trading plan, because if you have a trading plan, it's a lot easier to take emotion out of your trading. If you have if you're emotionally trading or revenge trading, uh, you're most likely going to do one thing, and that's hurt your portfolio. Revenge trading is terrible. At least it has been for me. And emotional trading, you get scared, you're going to lose money, blah blah blah. Oh my God, I don't know what to do. Oh wait, well, you know what? Maybe I'm greedy and I've got 35%, but I want 40%. Well, you know what? Sell when you're happy with the profit. That's my philosophy. I've been burned a lot by getting a little too greedy. So I developed a trading plan that works for me. And, I would advise that everyone develop a trading plan that works for them and fits their goals and their portfolio structure. Risk management is very important as well. Um, I don't have all my money. I want to make sure everybody knows this. I don't have all my money in this trading account. This is just a trading account, right? So I'm a little riskier with this account than I should be with the numbers. But that's because I can afford to be risky with it. If this were my only account, I would not trade as risky as I do. So risk management is something that's very, very important, and I advise everyone to protect your portfolio. Um, Also, just because I'm buying something or trying to make it's buying something, or Fridge is buying something, or Royalty's buying something, that doesn't mean it's the right stock for you. It might be the right stock for us, but it may not be the right stock for you. So don't blindly follow trades, y'all. Make sure that you're getting into something that you know what it is, you like what the stock does, you're a little familiar with the company. It doesn't take too long to do just a little bit of research to see what's going there. Um, so that's where I'm at on that. And with your trading plan, write it down. Don't just remember it, write it down so that way you can go back to it and make sure that you're following it. That's pretty much what I got.
All right, Freeze. Appreciate it, bro, for you dropping out what you needed to drop out to us. I've been charting the whole time you was talking, bro, and we looked at IonQ, and it looks like it's about any dip, honestly. Long term, I think that'll be something that you definitely could buy the dip on, because it almost looked like an inverse head and shoulders finna pop off if
Mhm.
if the plane gets ready to hold like it was holding. So appreciate those few stocks that you dropped on, especially with the defense stock and things of that nature. Something that we can definitely look into going forward. Look like Halliburton is at a buy level too, also. Um, so we thank you for that. And then we're gonna have my boy Fridge Financials to give us this little wisdom from the previous weekend going on to this next week. What's up with you, Fridge?
Yo, what's going on, guys? Yeah, so Royalty Trades brought me into his Discord. I don't know how long it's been. It's been, I think at least a couple months, maybe even a year. I'm not even sure, honestly. But he brought me in and he was like, "Hey, I've watched you do some of your financial education stuff, and I've loved what you did. So I want to have you as part of the team here." So I don't do a lot of charting as much. I'm a long-term investor. I buy ETFs, just keep it plain and simple, like SPY and all that. I look more at the economic outlook and where the economy is going, what's going on, and everything. If you are in the Discord that World of Trades has set up, and now we have partnered, obviously, which has been absolutely awesome. I've been pretty okay. I've been pretty good. I'm not like a financial expert by all means, but I've been pretty good at calling out CPI data, market reaction, PPI data, market reaction, and rate cuts and everything else. So we had a lot of important things coming out last week in terms of economic data, and economic data is really what drives where we're going in the future. You know, short-term trades, day trades are not my thing. I like to look at long-term horizon, what's happening, what's the market doing. And again, if you follow me on YouTube, obviously check it out. There's a lot of information there as well. Last week we had two important things, in my opinion. We had the FOMC meetings, which was about interest rates, which everybody loves to know about interest rates. And we also had the PCE data that came out as well, which is personal consumption expenditure. And that's the preferred Fed target that they're looking at is your PCE data, which is why there's a lot of hype behind it. Obviously, if you listen to Jerome Powell speak about anything from Wednesday, he just kept it very vague. And these markets don't know what's going on right now. There is no indication. There's no clear path where we're going the next month, next half a year, next year. We can't truly tell with anything going on right now. You know, the market has had a nice bullish momentum over the last like 2 years. Are we going to keep seeing that bullish momentum, or are we going to have a correction? You know, who knows what's going to happen with the tariffs that were just officially signed, as everyone said earlier today. The more important things to really focus on, especially now that we have tariffs in place, is what is our inflation data going to start showing the federal government? What is the CPI data coming in with? What is PPI showing? And all these different things give the Fed an overall understanding as to where inflation is, where it's cooling off, where it's going up. And all those things help them with doing interest rates. If we're going to have rate cuts, pause rates, increase rates, everything. So these next couple months are going to be very, very volatile in the market, which is why New Fish talked about buying VIX calls, you know, and I think the VIX is going to be having a lot of fun, and not for my portfolio, but it's going to have a lot of fun going up and down these next couple months, because right now we're looking at pricing in. If you look at interest rate predictions, they're looking at pricing in the first rate cut around like the middle of the year, like June. So we have about 4 months of inflation data that's going to be coming into the Fed. And Jay Powell has to be reading this and looking into it to really see what's going to be happening with the market. You know, all it takes is one thing, and we get, say, a surprise rate hike. We get a huge rate hike. We just keep pausing rates. Like, you know, we don't know what's going to be happening in this case. It's very tough to see, which is why I love to read into all these different economic events. I go on Bloomberg's economic calendar and I read through what comes up for the week. And it really does give you an indication as to what's key in the market, what's showing up right now. And it just helps with me understanding when to buy, when we're looking at a possible correction. You know, right now, this market is in a crazy, like, I think of it as like you're walking like a very, very tight rope right now. You know, just the mention of the DeepSeek thing that came out over the weekend, last weekend, crashed markets overnight, crashed Nvidia 17% or whatever it was at one point. It's a very, very thin line we're walking right now, because that was just something that was like, oh, okay. Like, I looked at it as like it was no big deal, but the market was just like, absolutely not. The whole AI push we've had in our, you know, major corporations over the last like 2 years, all of a sudden this one thing comes out and it just flipped the market on its head. And for me personally, I use that as selling cash secured puts against Nvidia. I've been cashing about 1% on that, which has been absolutely awesome. But it's a matter of just one or two things that can really flip this market on its head. And I'm ready I have cash available. I'm ready to buy in when things start going the wrong way, because I'm not really sure. And it's very, very vague. It seems like there's going to be a huge conflict between the Fed and Donald Trump, because Trump's demanding interest rates to be cut. Jerome Powell was like, we need economic data to prove it. And they're just button heads. It's like a brother-sister argument, basically. It's just like somebody's going to give, who is going to give in this part, you know, what's going to happen. Jerome Powell's been at the helm for years. And I think so far he's done a very, very good job of trying to walk back down inflation, because if you look at previous market history with high interest rates and inflation, usually comes a huge recession after that. You get a huge crash. You get into this huge deflationary pressure you get from cutting rates too much. And in my personal opinion, I think Jerome Powell has really walked the line very well with the walking down inflation to getting close to that 2% goal, which has been absolutely very hard to do. It's a very stressful job he's doing every single day. So I love that he does it. He's done a really good job of it so far because we haven't seen a huge correction in terms of like 20, 30%. We haven't seen the bear market. So he's done a really good job with it. Looking at data for this week coming up, because obviously PCE came in at expectations, which is why the markets were pretty green in the morning, which I called out. I was like, I think we hit expectations. We come in with a beat for inflation. It's going to have that optimism for interest rate cuts and everything. Came in at expectations. Market had a little bit of euphoria. But then I think people started to remember, oh, Donald Trump's definitely going to sign in these tariffs over the weekend. And I think the fear started coming back into the market halfway through the day, really pulled back down the market. So now we're looking at, now that these tariffs have come into play officially starting today, how the market's going to react Monday morning will be interesting. We don't know. I don't know if it's priced in or not. Maybe that was just the fear pricing it in. My major thing to understand is that with trading stocks and with buying and investing, it's not about predicting, it's about reactions. What does the market do? How do you react to it? If you try to predict, I predict the market's going to go up, 3% the next month. That's very hard to forecast. It's all about reactions to what comes out. And the data they give you over and over again, you read into it, even for like 15, 20 minutes, and it really gives you a better overall of things. So on Monday morning, they're coming out with manufacturing PMI, which is a huge measurement for manufacturing data. Basically measures how much our manufacturing has been, supplies, demands, everything else. Look at it coming in at a 50.1 reading. Anything 50 or higher means we have a more supply and demand going in for manufacturing, which obviously now with tariffs, having the manufacturing locally would be absolutely awesome. Anything comes in below 50, it's showing a little bit of a compression and slowdown in manufacturing, which again could be a hit to the market. So that comes in at 9:45 in the morning. So you might see some market reaction because the market opens at 9:30. You might see some reaction coming in at 9:45 for that. So I would be on the lookout for that one because you have no idea what's going to possibly happen for it. Coming in on Tuesday, nothing really important. Oh, there's JOLTS report. So the JOLTS is your job openings and layoffs and everything else that comes into play. And people always think, oh, like if we have a lot of job creation, it's amazing for the economy. Our economy's booming. Our economy's doing great. Things are pumping up and everything else. It shows how strong the economy is. But right now, I think we're in a phase where if you want rates to be cut, you don't want a super strong economy. I know it sounds bizarre and it kind of plays into market psychology. You don't want a strong economy because the more and more Jerome Powell sees how strong the economy is, he's going to probably just sit back and be like, I don't need to do anything. Our market's thriving. Our market's doing great things. Why do we need a rate cut? We can just leave it where it's at right now. So I think with these kind of job labor reportings that are going to keep coming in over and over again for the next couple of weeks, I think these beats and having higher jobs being higher employment, stuff like that, I think it's really actually going to not be a good factor for the market. I think we want to see a slowdown if you want rate cuts. If you don't want rate cuts, then sure, yeah, booming economy is great. But you're looking for that kind of compression in the job market first because that's not good if you want rates to be cut. Same thing if you think about the idea of if more people are working, more people are spending. More people are spending, you have more money in the economy, but you also have more supply, more demand. It might pump up prices and everything. All these different things can factor it in. So with a jobs report B, it actually might have the inverse effect on the market because it's going to be like, oh, we don't need rates cut anymore. We're good to go. Market's rolling strong and we don't need to do anything with it. So that comes in at 10 o'clock Tuesday morning. So be on the lookout for the JOLTS report to come out on Tuesday. And I believe the last major one that I like to look at is non-farm payroll. Similar idea, comes out on Friday morning at 8:30. Non-farm payrolls coming in. Again, basically covers everything that's not private, not farm, those kind of things. And again, same thing with payrolls and jobs. Anything that has to do with job report and the job and labor market, that's going to be that indication as to what's going to happen. Is our economy slowing down or is it still ramping up production and going even harder? Because if it keeps ramping up, then Jerome Powell might see there be too much money pumped into the economy again, might have some rate hikes in the future, which we do not want to see, obviously, as we keep going on. So a lot of important data coming in. Again, we're pricing in 2 rate cuts for this year. The Fed has their goal at 2 rate cuts. So to be down at about, I believe, like 3.75, maybe 4% for an interest rate at the end of this year. So they're looking at only 2 cuts. If the market starts to price in more, that's where you might see some sort of pressure coming in because somebody has to give. I know last year at one point the market was pricing in 6, and I think the Fed had like 3. So if you see the market price in more rate cuts than expected from the Fed, that might be an indication you might see some sort of pullback and some correction. There's a lot of market psychology behind all these different things, which is why if you really do read into the economic calendars, you look at the data, you look at how it could improve, your trading strategy and everything. For me, long term, again, I'm sitting on cash a little bit right now just to see if there's any kind of good buying opportunities. Like Monday was a great buying opportunity because it was down like 1.5% at one point. So right now, that's what I'm looking at because there's so much fear, so much uncertainty in the markets right now. CNN's fear and greed index is getting very close to fear right now, which I think just is very valid in terms of what we're looking at here. It's just a matter of just knowing what's going to be happening and when are we going to react to it. Again, if you do have any questions, feel free to leave in the chat about economic data. Anything it is you would like me to go over, I'd be more than happy to do so. Also, again, Fridge Financials on YouTube. Also, I cover a lot of different things to look at. When the Trump and Kamala Harris election was coming up, I made a video about Trump's imposed tariffs and what it's going to mean for the economy and about interest rate hikes and everything, because these tariffs do play a huge factor in possibly reigniting inflation. Because if people are paying more, if businesses are paying more for things to come into the U.S., those prices they pay more for, they offload users on the consumers, which raises up the prices of goods and services that you're looking to buy every single day. So those are things as to really, if you really understand how that works, it definitely does help give you a visual. And that's why people are starting to freak out about the inflation coming back up potentially. And again, our first report for this year with PCE showed that we're going back up a little bit. It's a little bit of a tick higher in inflation. So it's going to be a crazy stressful next, 3 to 6 months minimum with how these tariffs are going to go. So again, if you have any questions, you can obviously leave them down in the chat. That is my educational background because I can't chart as much as Royalty, who does an amazing job, and everybody else in here who charts things. I can't do that. So I bring my knowledge with looking at long-term market outlooks, where the economy's going, and when we have some good buying opportunities for the long term. So hopefully you guys do learn a couple things as I had this nice little spiel here. I am also a teacher by day, so it probably makes sense as to why I'm such an educator on things. But yeah, thank you guys for listening to me ramble about stuff. Again, feel free to reach out if you have any questions. Royalty, thank you for having me in here, man. I appreciate it always being here and be able to talk to you guys about things. And yeah, feel free again. When you look at Discord, Fitch Financials, I'm always putting out some good financial content for you guys.
All right, then. Appreciate it, Fridge, man. Hey, that was solid. You talking about charting, but hey, you explain economically way better than I do. I guess is why I stick to the charting. I let you stick to what you good at, man. So, um, I definitely want to show a deep appreciation for all of you guys trying to make it, tapping in with the good analysis for Nvidia and Apple. If you have anything else you want to drop, just let me know, bro. I mean, like I said, we talking money, so
Thank you, thank you.
definitely.
I appreciate it. Now, I mean, I just kind of wanted to go over maybe I just wanted to give an example of a recent little strategy I've learned. Something about I don't know if anybody knows about in the chat if you guys know fair value gaps. I've been playing with them a lot recently, and I want to call out a very big short that I found on Nvidia recently using this strategy. And let me clear my chart out here real quick. Okay, let me give you guys an example. So a fair value gap is basically these giant candlesticks that you see right here. You know what I mean? Every time you get these giant price fluctuations that don't give a chance for the other side to react. For example, this giant dip right here, it didn't give buyers a chance to even pick the price back up because you just had so much selling pressure, right? And these type of break of structures, you always want to kind of mark it down. And the way you mark it down is by marking the last wick
from the candle before the giant move to the top wick of the candle after the giant move. And that's your bearish fair value gap. Since the price is dropping, it's going to be a bearish fair value gap. And as we extend this area, you can see where price attempted to kind of break structure, but it failed. And this is because it was trapped inside of this bit of bearish fair value gap zone, which I in return picked up put around 145, 146. I saw this break of the 5-day MA, and it was for a great short. I paper handed it around here. I didn't pick up the rest of the money here, but it was something that I realized that it was a great strategy and it worked out. I've back tested it before with a bunch of green candles, red candles. It works vice versa, and I'll be showcasing it more in the Discord. If you guys want to join, the link will be in my bio and in Royalty Trades' bio. And thank you for the time. That's something I wanted to shout out right there.
Nice. Yeah, I've tapped in with the FVG here and there. I've been around some great traders that they've used the same type of strategy too. That kind of like a ICT strategy or whatnot. But it's definitely a powerful tool if you know how to use, and this is why I'm trying to put together these group of people, because once a week we come together and we drop this, and I even got another um, signaler that's not even here. Maddie, she's new. She came in with trying to make it. Um, she's amazing with the day trade. So I'm definitely looking forward to having her next time when we do this. Um, this little group discussion. And I hope the rest of the family here can tap in, weekly with me when we go over these stocks and try to anticipate, and build on what the market's giving us on a day-to-day basis. So I appreciate all you guys. Is there anything anybody else wants to add on, Fridge? Uh, Fish, anybody want to add something else on? Or are you guys good?
I got this new fish, big pond. I got one more thing that I just want to remind everybody about. Fintel.io, Fintel.io. That's a great tool to have in your back pocket, man. That's how I find out all the true short information up to the 30 minutes. When you go to Fintel.io, if you're looking to check out short information, put in your stock symbol and then short in the search bar. Click search. The first thing that'll pop up is IONQ short. So you click on that, and then the first screen you're going to see is going to give you some short interest nonsense. Don't pay attention to that. All that stuff is updated every 2 weeks, so that's basically useless for you. What you need to do is you need to scroll down the page. It's going to tell you how many short shares are available. When they were sold, it's going to show you. I think that one's updated every 30 minutes. So you're gonna see how many short shares are being taken out, or if the shorts are retreating and trying to cover. So that's a good one right there. And then if you scroll down a little bit more, it's going to show you the short volume ratio, and that's going to show you what the true short is. Up to the hour, I believe. So that's a very good tool to have in your pocket. I use that a lot. And then if you have options that you're trying to figure out how much money you're going to make and where you need to be to make that money. I know Robinhood has a great option simulator, but not everybody uses Robinhood. For example, I use Fidelity, and I don't believe they have an option simulator. If they do, I don't know about it. So optionsprofitcalculator.com, I believe is what it is. That's a good tool that I use to figure out where I need to be on options to make X amount of money. That's what I got. And Royalty, thank you so much for having me on, man. I really appreciate it. It's always such an honor when you ask me to be on, man. I appreciate it. Thank you.
Oh, bro, anytime, man. Your family here in the kingdom, bro. So, definitely, you definitely be on going forward whenever you want to come in. I mean, I know the people in the chat, they appreciate the information that you drop. Like I said, people respect you for your plays because you get in before before the momentum even catches. You're catching on before everybody else is getting in, and that's a huge advantage to any of the followers that you have on after hours and things like that. Um,
Thank you, bro.
somebody
Thank you.
somebody said options. What does he use?
Optionsprofitcalculator.com. I believe it's .com. Let me check it real quick, but I believe it's optionsprofitcalculator.com. I'm looking it up right now just to make sure. Yep.
I use it every week. It's the same thing.
Yeah.
Yeah, that's what I use.
Yeah.
Love
Options
it.
optionsprofitcalculator.com. It's a great tool. Oh, and then one more thing. Just for education purposes and tools as well. I want to shout out Warren Buffett. Warren Buffett gives out some great tools. So check out his profile, go through it. If you're not following him, you should. He's got a lot of great tools that he's put together throughout various posts. Just search back through his post history, you'll find it. And then Terrified of AI. So that's another great follow. That dude is just he's a wealth of financial knowledge, man. Wealth of financial knowledge. He's a financial professional during the day. So I take what he says as gold, man. The dude's really smart, gives out a lot of great information, and he makes it super easy to understand. So he's another great follow.
Solid. Appreciate that. Appreciate that. And Fred, you good, man? You got anything you want to share?
Yeah, if you want to watch me also not do educational stuff and full degen stuff, I do a chat GPT, picks my trades every single week. Put it on like literally every social media thing I have, like Instagram, TikTok, after hours, you name it, it's like there on YouTube also. And yeah, I basically started off with $500, put in $100 into 5 stocks every week based off of a prompt from ChatGPT. Right now, sitting up about 20%. I had my first red week this week, but I looked at my stocks, and honestly, I think I could have broke even if not made a tiny bit of money if I held till Thursday. But you live and you learn. Obviously, as you know, you can't look at the hindsight. I look more moving forward. But yeah, you want to watch me do full degen and not learn educational stuff, then follow me on that. Watch me do it. I'm gonna be picking out my trades tonight and tomorrow morning and look at the charts a little bit. And again, I'm up like 20% in like a month, which is like super stupid. And it's probably not going to work long term. But with AI, you never know. So if you do just love to stay for degeneracy, I do have that also. I love to do it in my free time sometimes. Not anything close to my major portfolio that I have with my retirement stuff like that, but it's a small little portfolio challenge, and people love to watch it. They follow along, and so far I'm outperforming the markets as I started. So, Gentry, if you're wondering what prompt I put in, it's a long story. If you have the YouTube channel, I made a video on it, I think like 2 weeks ago. I gotta make a new one on it. But you can check out the YouTube channel. It does all these breakdowns about what I do for prompts and charts and everything. Or watch me on after hours. I put stuff on there too. And you'll see all the info there. Everything goes live before markets open Monday morning. Um, so yeah, so you guys love degeneracy like I do sometimes with myself. I do it with someone I'm okay with losing. It's a lot of fun. Even people that I've talked to, I've met here in Discord and after hours, like, oh yeah, I know about you from the ChatGPT thing. Oh yeah, that's what we do here. But it's a lot of fun. Again, just like Newfish said, Royalty, thank you so much, man. I know you basically like adopted me like a year ago from the other Discord we were in before, and ever since then, I couldn't thank you enough for having me on here. You know, I'm always trying to be around to help you out with whatever it is you need. And you know, I'm looking forward to working. I've been working with Newfish also recently. It's been absolutely awesome. So I'm excited to keep growing with you guys. I'm trying to make it same thing. You guys are awesome. So thank you guys so much for having me on tonight.
Oh man, appreciate that. And I appreciate you. Appreciate for having you, man. Like I needed somebody that I could trust with. Somebody said, "What's your handle on after hours?" It should be Fresh Financials, right?
Yeah,
Okay.
it's. I think I'm the only one that has that on all social medias. And if anybody ever has it over me, I'm gonna try to buy him out for it because this is my handle, so I want it.
Hey, that's solid. That's real. Hey, if you're gonna buy them out for it, hey, you do what you gotta do. Somebody asking about hymns, HIMS. I actually like that stock because I see it a lot. But back to what I was saying, hey Fridge, I appreciate you for tapping in. I needed somebody that I knew I could trust with, economic activity, and the first person that came to mind was you, bro. So hey, definitely appreciate you for offering that to help out and become part of the team, man. Um, Somebody asked about hymns. Memes on After Hours. Of course, there's memes. Somebody on After Hours, and that's all they do is make memes. Hymns, hymns. Hymns. Okay, I already got hymns charted out. Let's clear it and start from the beginning. So hymns is looking very strong. Like I said, overall, I think this is a good stock. I think it's something that you want to invest in. They're coming out with a lot of um, new products, um, and they're being in stores. I walked past a line of them in Walmart. So, well, Walmart's going crazy. So if you're seeing some in Walmart, it's a possibility that it's going to be some money flowing into it. So already off top, we're looking at the 6 month chart. As you can see, you got the beginning of 2024, the middle of 2024, and then the beginning of 2025. It's already looking solid. So I go from the month from there and find a nice, trend. And obviously there's going to be more trends that you can find, but like I said, my eyes kind of just find the best one for, swing trading, and then you go from there. But I'm on the monthly, check the weekly. And that doesn't really look good enough for me. That's too much of a consolidation. Even though it's a bottom, we'll take, well, I'll draw it on a daily. So we'll line that up here. So right now we're finding a bottom on a HIMS. And this will probably be the last one because that next run up it just looks massive. So normally when I see big run ups like that, I kind of stay away from them because they can set up for a nice just fall back to the downside. So all right, look like we got our trends all marked out and labeled. Hymns right now is breaking 52-week highs above $35. So as we start zooming in, we seen a nice just uptrend here. That can account for one. I would take this one. I would trust this trend. Just because it's moving so massively, I'll take it. So right now, it looks healthy. It looks like a nice, healthy stock. As you can see, this almost looks kind of like what we see in the market right now, with a gap down and then a minor gap up if we go back to spot chart. But let's focus on this one. So we've seen kind of a lower low being made here, and then it finally caught trend around here, and it didn't quite retest, but we caught the next bottom, and I trust this one a whole lot better because, even though we made a lower low here, it bounced back up and it took back off. So we have a couple of trends going, right now. You got one following here, and then you have a longer term trend down here and another long one down here. So as of right now, if I'm looking about the immediate dips in the trend, we're gonna follow this one first. We're gonna follow this one first, and this one could, it could fly for a swing trade with a buy here because even if it breaks, we have another one lined up here also. So, what can happen is we come down here and we retest this support level, and it may drop, but here's the next trend level here, and we could see it break, bounce, and get bought up here, and then push back up. And retesting this, it's not going to be a problem if it's a clean break. Let's go ahead and scale in since we kind of have what we want and zoom in and really get to the details of it. So, like I said, 30-minute chart. All right, there's a gap right there. So this means institutions or, they want to buy in right here. So whenever this comes and retests, depending on how quickly it drops down, and if it's just pure price action and no gap downs, kind of like this, just skyrocketed up. We see a drop down here, and it eventually gets bought up around this bottom here. Then we can take on a bounce, buy, watch it go up, because even if it bounces down here, or if it doesn't bounce around here about $32, 31, and it breaks, here's our next level of support. So it doesn't necessarily mean that we'll head straight down, but what happens is if it breaks support, it just could be a false breakout, and we could get a consolidation kind of like this. And this is how you find, confluence in your charts. You can kind of estimate, all right, if we got a gap here and where buyers gapped up at, and then we got another rising trend level here, then we have another support trend right there. These are the stars aligning. Everything down here is filled already, so it's not like we just have anything that's needs to come and be retested just down here. So, we come down here, that's one, that's two, and then that gap right there is three different indicators that's telling me it's a healthy buy. So even if there's a panic reaction and they just want to, stop you out, play without a stop loss, watch the reaction, and buy again here. At least if you buy in here, you make some of your money back on a retest up here, and then you take your profits. And then once it reclaims the trend, then you can see it rise back up. Since this was where a buyer stepped in at originally, you watch it reclaim the trend, and then you ride these original calls from here back up into profits, and then you look for the continuation up into highs. So hymns look healthy. This is where it was unhealthy because you seen the gap down, the retest, the flush. You seen the gap down here. You seen it actually try to break out. But like I told you, one of the other stocks, Palantir, if you see a gap down and you see the price action actually push a lot higher without another gap up to actually flush out the bears here, then the price could come back down aggressively and end up selling off because it didn't have enough buyers or liquidity to actually push beyond that supply zone that it got out of. So we kind of seen that right here, and it actually pushed up and it came back down, wicked off of it, and got bought back up. And I guess because this wick right here was so strong, it gapped it up the next day to go ahead and squeeze the bears out. So it's possible. Same thing we seen right here. You seen it trade above these supply levels, and then you want to see a gap up showing strength. And once we got that gap up, boom, it filled it, came back up, and then we eventually traded back up until we got here. It traded up, but it came back down, and this wick right here kind of signifies strength, sideways into another gap up, and they're probably going to test and grab this liquidity right here and then push back up to the upside again. So very solid chart, very solid company. At the moment, it looks healthy to buy. I say it's a green light on it. So I hope this gives you some clarity and give you some direction on HIMS from a technical perspective. I'm not really sure what the financials look like, or, they're blowing earnings out the water. So I mean, hey, it's solid. So I think that's it. Anybody with any other chart requests? It's only 26 people left. I think we got up to like 100 and some, which is solid for me. But if not, we can go ahead and cap it off here. Like I said, I appreciate my family for tapping in. I appreciate, all you guys for joining in and viewing and soaking up this information. If anybody wants to catch it, I'll be posting the link in after hours. And if you're in the kingdom, then I'll be posting it in the Discord also for the ones that's not able to um, get to it. So you can go ahead and tap out if you want to. I see some people just not coming in with a few more. I'll stay on for a couple of more minutes just to walk them through these two stocks. I think that's what he said, SLS. So far. Okay, so we got a couple more people on here looking for stocks. I'll do two more. I'll do these last three. SLS, ACHR, and I'll do SoFi. And then I'm gonna wrap it up from there also. Hey, but family, I appreciate y'all for tapping in, trying to make it. Fridge Financials, New Fish Big Pun. Y'all true MVPs tonight because y'all are bringing a whole new spin to the game. So appreciate y'all.
Thank you, fam. Thank you, man.
Thank you very much, bro.
Yes,
It was a
sir.
pleasure.
So hopping on SLS. I mean, it looks solid. That looks good from a 30-minute perspective. So whoa, what happened here? So when we looking at stocks, we want to look at how healthy um, the stocks are from a bigger perspective. I'm just on the daily. So hold up, something ain't right. This must be a split or something. Reverse split. All right, so this got to be a reverse split or something like that because this chart's crazy. But um, it's maybe one of those penny stocks. I mean, I'm not sure the background behind it. I don't know why the chart looks like this. I never seen anything like it. But don't put your money into it. Don't put your money into it. That's all I can say. Leave it alone. Don't touch it. It ain't for you. Yeah, so we'll leave it at that. Glad you asked about it before you took it. If this is the ticker, it say you put SLS, so I'm hoping that this is the right one. Don't buy it. ACHR, Archer Aviation. I must have went over this stock with somebody. Yeah. Yeah, so I mean, it still looks healthy, and I think at the time we were talking about it, I think I wrote reject, right? Yeah, and it did reject in the side of here, and then it eventually came out, and it tried to break above supply, and it came back down. That's so. I mean, and I can see that if it's waiting on some type of FAA approval, I can see that. It, I don't know, but if this is waiting on FAA approval, would it have anything with that passenger plane colliding with that helicopter? Would that affect this? Because it does have some buying that wants to fill down here. Here's it trading into supply. Didn't have enough to actually break out. It came back down and gap down again. It's doing the same thing right now. So, it filled supply and then it came back down again. And it looks like it wants to fill. It wants to fill down here because this is where majority of the buyers are. Everything else looks solid. Okay, you said it wouldn't. Okay. But everything else looks solid. It looks like it just wants to fill this. That was private. Makes sense. So right now, long term, we'll look for that to fill. 6-month perspective. like I said, it looks healthy from a 6 month perspective. Because it's, even though it's coming down right now, it still has a nice little uptrend that's forming on a bigger frame. So you might be able to get in at even better prices. You got a slight little trend built right here. Let's go to the weekly. See what's holding on here. Too close. Gotta bag up a little bit. I'll take this trend. And I'm not really gonna take a resistance because it'll easily break. Yeah, that it. So the uptrend looks solid. I'm not gonna fake it. Looks solid, and it looked like it already attempt to break out if I actually draw the line. So we had an attempt to break out, but the supply levels, and like I said, this is why you need more than one level of trading. Even though I have the trend here and we saw the breakout right here, there's underlying data that helps out with this, which is the gaps indicator. So right now, we got the breakout, but then we're breaking out into supply. So a gap would have been needed above probably this 992 and this 1030, 1029 range. We would have need to see a gap somewhere above this supply zone. Actually, both of them, which warranted in a fake breakout. So just watching this, I mean, this may not get filled because the opportunity for it to get filled ran out like right here, somewhere in this right here, because that would have gave it a nice price and time to actually fill within this trend. If we could have came down, gap up, probably came down somewhere in this area, that would have been a nice way to see it come down in here to actually fill inside of this pattern, which would it'll be a beautiful play. But now we're actually trading above it. So if we see another gap up anywhere inside of here, then we're probably going to see it break out and try to push. You might see another breakout or push above this supply level and come back down and retest these levels in here somewhere. And then if it gives you another gap up anywhere outside of this trend, then that'll be the buyers of the liquidity stepping in to go ahead and push it up to the next level. Outside of that, if we fall inside this little microphone pattern, let's say it comes over here, but then it breaks down somewhere over here, like it just trades sideways, and it finally breaks the pattern and it trades over here. This is like mid to late February right now. So if it gets over here mid-February without filling this and just low sideways, then that'll be when you'll see the break and actually fill, then probably the retest up here. So that's just my take on it long term. It may trade sideways in this range and then this pattern, and then finally it breaks down somewhere over here to grab that liquidity and then push back up to retest. And that may be what it needs to actually break out and hold above that 1030. Unless we get the gap up before that. If we come Monday and prices gap anywhere above this 1029, 1030, then we might be good to go. That'll be what it needs in order to go ahead and break out to the next levels, which look like it'll be probably Probably something like that. So it kind of trades in big consolidated levels, and then it makes a huge move. So, and as you can see, we got, like, you have this move right here. You can have this move right here. And then you know, the same way we seen that move right there, we can see that move, you know, come down like that. So that's just what we got to be mindful of. History always kind of repeats. So unless, you know, the trend actually gets broken, those are the angles that we see. We look at past movements and we kind of anticipating in the future. So uh, I think that's, I got one more, I think. Let's see. That's a SoFi. I said SoFi was gonna be the last one that I do. I seen you put AMD, but you know what? I think I still got AMD chart up, and I just explain that real quick. Yeah, so I still got AMD chart, you know, drawn up. As you can see, it's been breaking down for a while now, making lower highs on a bigger frame. Gap down after gap down after gap down after gap down after gap down. So I don't know what's going to happen with it if we break these levels for some reason, and you know, earnings is right around the corner. Actually, it's Tuesday. We could see a fall down to $79 to $80. I got support levels right here, which could, if it does dip, I mean, we got this right here. So if we just stretch that out, boom, that show you where that can line up at. And then if we break to the upside, it could be a little bit something like we saw on Apple, where it, you know, completely breaks out and pushes up, and then it gets a sell off until investors figure out where they want it at. So earnings right around the corner is never a a good thing. Like, you know, it's always gonna be a gamble. It's always gonna be a lotto play. Microsoft just had good earnings, and it flushed. Meantime, we seen Tesla hit red on both, but it's still holding. So hey, just be careful as Bitcoin tanks, or attempting to. Yeah. And then SoFi. Okay. Yeah, SoFi looks, it don't look good. So it gapped down on earnings. Like I said, you can be green on both in the earnings. I'm not sure what I was said on the call, but it took a major gap down. We're seeing what we kind of saw on SPY and Qs, where it, you know, it makes this exhaustion push up where eventually it gives out. You have a gap down, a gap up, and a gap down kind of in the same area. So this would be where the bears and the bulls are kind of fight, like right in this zone right here, to make another push up. So what we'll want to see, we do have this gap down right there and right here. They're red, but y'all get what I'm saying. So we could see prices push down here if we have a red market coming this upcoming week. This would be the perfect fill, and we'll look for support around this 14 mid $14 range after this fill. So if we recover into this upcoming week, then we'll look for prices to build. Um, we'll look for prices to build above the $16 range. You've seen a minor gap up here. It's sold off, so it could be overreaction, or it just could be a dip that needs to be bought later on, and it comes back eventually if it decides to keep going lower. But as of right now, we want to see prices push back above $16 and go from there and see if we can make some recovery into this supply zone up here. Like I said, we could make it back up to 17 or somewhere around here where the bulls still sit at, and we just see how that plays out. But just be cautious. If you're gonna take calls, go a little long, and I think it's a good buying opportunity. Honestly, anywhere within this range here, I think is a good buying opportunity for SoFi. So definitely tap in and that, check that out. And yeah, that was my last one I'm gonna check out tonight. Like I said, I appreciate the team. Q, shout out to you. You gonna be you gonna be giving your due diligence in here pretty soon. Terrified of AI, what's up, bro? Appreciate you tapping in. We'll definitely have to have you hop on here with us one day when we do this. Like Fish said, you always dropping good stuff. Financial advisor during the day, bringing spotlight to the community overnight. So appreciate what you do also. But options, what are your opinions on Greeks? Um, Make sure that the delta outweighs the theta or is close to it. Those are the things that I watch for. Look for IV, the IV percentage. If it's 80 to 100%, kind of like Nvidia is right now, that means you can expect some rapid decay on your contracts when you're swinging. If your deltas, let's say your delta's 8, but your theta's like 1.23, that means that you're holding and you're hoping for a explosive move on the stock. Because if you're not getting that, then you're just pretty much giving away money, because your delta will never catch up with your theta unless it just goes in the money and pushes above that. So if you're gonna have a $20 delta, you need to have at least a 19 or 20, maybe 21. Nothing higher than a 21 or 22. But you need to make sure that your theta is really close to your delta, so that way you don't lose too much money, because you got to remember every day that you swing, that's how much is going to deduct from, you know, how much your contract's going to be worth. And it makes your contract have to work just as hard for it to make money for you. So when you're buying leaps, you're buying a leap contract, and let's say the delta's 20, the theta might be like a penny, 5 cents that you lose in a day. So that means that you're just about never seeing it as long as it consolidates and doesn't drop too low. I mean, you're gonna get your money back when you have a real small theta and a higher delta. And then when that price action goes into money, you start getting those delta increases, and that's where your money really starts flowing in until you decide to sell it. So Greeks, that's how I feel. Make sure that your delta can keep up and outweigh the theta, and make sure that IV's in check, so that way you're not swinging and you're losing a ton of cash every day because of the burn. So that's my take on that. But I'm gonna wrap it up here, man. It's your boy Royalty Trades. Appreciate y'all. Y'all could have been doing anything, but y'all decided to hop in and tap in with the kingdom. Um, yeah, it's just me at this point. But like I said, it's pretty much over. The recording is gonna be on after hours, and it's gonna be on the YouTube page. So I'll drop the link and check that out. I'll catch up with y'all guys Monday. So make sure that you on the right side, not the wrong side. It's your boy Royalty Trades. Catch y'all on the other side. I'm out.